Hey everybody, I'm Blake Oliver. I'm a certified public accountant, and today I'm going to answer some of your questions about accounting and bookkeeping. So this question is from Justin in Florida. He asks, how risky is it for a business owner to handle their own books? Is it realistic to have your books actually be clean? Great question. It is realistic, but I want to caveat that. I don't recommend that you do it all on your own. I think it's great to get connected with a bookkeeper or an accountant who knows your accounting software and can help you set it up right. That's the really important thing. You want to make sure that your accounting system, and especially your chart of accounts, is set up to capture the information that your tax accountant is going to need to do your tax return. Because that's usually why most of us are doing the books. It's to get a tax return done. And so if you don't have the right account set up, it's going to be a lot of work at the end of the year trying to sort things out. So I highly recommend set up Relay as your bank account, then get a Xero or a QuickBooks file and connect that to Relay so you're bringing in all your transactions. And then on a daily basis, every morning with your coffee, go through and categorize the transactions and put in descriptions wherever you can for those transactions. That information with a good chart of accounts, good descriptions, doing this on a daily basis, it's not going to be a lot of work. It might take you 5 or 10 minutes a day. I guarantee you, you're going to be in a good spot when it comes time to do your taxes. You might ask, at what point do you need to hire a bookkeeper? I would say if it is taking you more than a couple hours a week and your time is more valuable than that, like what you're putting in versus what it might cost you to hire a bookkeeper, that's when I say go ahead and do that. But most businesses, they don't have a ton of transactions. You got a handful of transactions per day. You can just go in and categorize that yourself. But when it gets to be several hours a week of invoicing or paying bills, that's probably when it's time to hire. Now, there is a middle option. You could go and you could hire a bookkeeper who will answer your questions or come in and check your work. I think that's a great solution. So find a bookkeeper who can go in, check your books, clean things up, help you out on a monthly basis so that at the end of the year, you're already set up for your taxes. This question comes from Carla in Texas. Carla asks, how do you figure out how much you can reasonably spend without killing your business with debt? Well, you definitely don't want to kill a successful business with debt. And I'm no expert on this, but I've had a few businesses of my own, and so I can tell you what I did. Personally, I would not expand until your existing business is cash flow positive, right? You're making money with your current business. You have paid off the debt, or you're able to service the debt for your existing business, and you're not worried about that. Then it's time to expand. I would recommend setting up a separate bank account and going out and getting financing if you need to, and putting that money into that bank account. And then that is financing that you only use for that expansion opportunity. Another thing you'll want to do is set up a cash flow forecast. There are templates you can download online that will help you create both a short-term and a long-term cash flow forecast, or better yet, go out and work with an accountant who can help you do this and keep it up to date. And that will go a long way to making sure that you don't run out of money too soon. And that's what happens with most businesses that try to expand, is they underestimate how much capital they're going to need, and they run out of money before they get to break even. And you don't want to do that. So hire a professional, keep the money separate, and don't expand until your current business is cash flow positive. So if you have no idea where to start with cash flow forecasting, I would say hire a pro. If you've used spreadsheets before, if you know your way around Excel or Google Sheets, you might be able to figure it out. A cash flow forecast is really just a list of your income and your expenses, and then it shows how much you are bringing in terms of cash, or you are losing in terms of cash every week or every month. And then you just do that in a column for every week or every month, and you see over time how that changes. And so you can use a cash flow forecast to figure something out, like if I start with $100,000 and I'm burning, right, or I'm losing, say, $10,000 a month on average, I know that I have 10 months of what we call runway. And so you have to figure out how to get to profitability so that you're not losing money within 10 months. And then, of course, you got to service the interest payments on that, and that should be part of your forecast. If all that sounds really overwhelming, go out and hire a pro. This question is from Christina in Pennsylvania. Christina says, what is the right way to split expenses when you share a resource across 3 businesses? For example, mileage on a car that is shared by 3 businesses or software that is used by all 3. So splitting expenses across businesses can get really complicated really fast when it comes to doing the bookkeeping. So you want to avoid it if at all possible. I'd recommend trying to set up each business with its own subscription, but I know that's not always possible. But here's the good news. If you own all of these businesses 100%, which is often the case, the IRS really doesn't care where those expenses happen because, in general, those expenses flow through to you personally if they are pass-through entities. So if it's in LLC number 1 or LLC number 2 or on your Schedule C, doesn't really matter when it comes to computing the income tax you owe. That's a generalization. Be sure to check with your tax professional to make sure that's okay. Now, if that is the case, it's not going to be a big issue in an audit because whether or not the expense is split among 3 or just in 1 doesn't really matter to that ending tax owed number. So the auditor probably isn't going to care. So my answer is it depends. It depends how much you want to do things exactly according to the rules or whether or not you want to just get things done so that you can move on and grow your business. And that's kind of always something we have to deal with in bookkeeping and in tax is you can do things perfectly or you can do things good enough.